Now come to the next question of cash flow statement. Cash flow statement. Here we will solve the comprehensive problem: cash flow from operating, cash flow from investing, cash flow from financing activities. We will see the comprehensive problem. Right from we'll see the all activities: operating, investing and financing. It means we are going to prepare a complete cash flow statement from the following information. So see the question. From the following balance sheet of Ajanta Limited as at 31st March 2017, prepare cash flow statement. So the balance sheet is given of Ajanta Limited for the two consecutive year, 31st March 2016 and 31st March 2017. So balance sheet in a prescribed pro forma, equity and liability side, shareholders fund. Under shareholders fund, equity share capital, reserve and surplus, note number 1. So you refer immediately note number 1. What is written about the reserve and surplus in note number 1? In note number 1, when I am referring, it is general reserve and state balance in statement of PL of the two consecutive year has given. Then again I go to the balance sheet. Non-current liability. Under the non-current liability there is a long-term borrowings, the rate of that is 9% debenture. Thereafter the current liability, trade payables and other current liability. Trade payables is note number 2. So immediately I refer the note number 2. So trade payables, under that creditors and bills payable is there, and other current liability, note number 3, outstanding expenses, outstanding rent is there. Now coming to the asset side, non-current assets, fixed assets, note number 4, tangible assets. So I immediately refer to the note number 4 immediately, and to see the what information is given in note number 4 related to intangible assets. So plant and machinery is there and accumulated depreciation is mentioned. Now again I come back to the balance sheet. Non-current investment, note number 5. I immediately refer to note number 5. So non-current investment, under that shares in XYZ Limited is mentioned, is given. Now immediately I come back to the balance sheet. Current assets, inventory, trade receivable and cash equivalent. Now additional information, we have to refer the additional information given in this question. So there are the two additional information, A and B. So first one is A. During the year 2016-17, a machinery costing rupees 50,000, accumulated depreciation thereon rupees 15,000 was sold for rupees 32,000. So related to sale of machinery cost 50, accumulated depreciation 15 of that machine, which was sold for rupees 32,000. And information number B is 9% debentures 80,000 were issued on 1st April 2016. It means the debenture issued on the first day of this financial year 2016-17. So the interest will be calculated on the whole amount of the current year. So we'll prepare the cash flow statement. So give the heading cash flow statement and write the name of the company. The name of the company, here it is mentioned that Ajanta Limited. You write the name of the company over here, Ajanta Limited. Cash flow statement of Ajanta Limited for the year ended 31st March 2017. 31st March 2017. as per the accounting standard 3 revised. We are going to prepare the cash flow statement as per the accounting standard 3 revised. So the format is particular, detail and amount in rupees. Okay. So start with the cash flow from operating activities. So first one is, you write the first one, cash flow from operating activity. This is the first activities, operating activities, number 1, cash flow from operating activities. This is the number 1. So under that we will see the profit. So here profit is directly not given in the question. You see the note number 1, in reserve and surplus, general reserve and balance in statement of PL is given. So you see the balance in statement of PL, last year there is no information, no figure is given, no amount is given in the 2016, but in 2017 it is 1,20,000. So this difference indicate the net profit of the current year. Whereas the reserve is concerned, general reserve, there is no change in general reserve. It is still 1,20,000 last year and current year is also 1,20,000. It means no amount is transferred to general reserve in this year. So we'll directly write net profit before tax, net profit before tax and extraordinary items. Net profit before tax and extraordinary item is the difference of the surplus, that is 1,20,000. Last year there was no figure, this year it is 1,20,000. It means current year profit is 1,20,000. No amount is transferred to general reserve, so there is no appropriation of profit. So directly we will take this amount. Now we will add to this, non-cash expenses and non-operating expenses and losses. This we will take over here. So here see non-cash expenses. So there is a matter of depreciation. Okay. So we will prepare to know the non-cash expenses related to the depreciation. So we will prepare one ledger related to non-cash expenses. Accumulated depreciation is given. Accumulated depreciation is given. Okay, accumulated depreciation. Now see, in this accumulated depreciation we are going to prepare this ledger from the information given. So in accumulated depreciation you see the note number 4, the opening balance of accumulated depreciation. Accumulated depreciation have a credit balance. So opening balance we will write that credit side by balance brought down. Opening balance of accumulated depreciation is given 1 lakh and closing balance of accumulated depreciation to balance carried down, this is given 1,50,000 is the closing balance of accumulated depreciation. Okay. Related to the depreciation, you see the additional information number 1. In additional information number 1, during the year 2016-17, machinery costing rupees 50,000, machinery whose cost of the machine is 50,000, Okay, cost of the machine is 50,000 and accumulated depreciation on this machine is given, that is 15,000. In additional information number 1, you refer the additional information number 1A. So after deducting the accumulated depreciation from their original cost, the remaining amount which is reflecting, it is called written down value. What it is indicate? Written down value. And this one is sold for rupees 32,000. This machine is sold for 32,000, which is less than the written down value, So this difference indicate the loss on sale. So here what we have calculated, profit oblique loss on sale of machinery. Profit oblique loss on sale of machinery. This is the heading. And we have calculated cost of the machine is 50,000, accumulated depreciation is 15, less written down value after deducting the accumulated depreciation from the original cost, that is 35, and this machine is sold at rupees 32, so 3,000 is the loss. So in accumulated depreciation account, you see that in accumulated depreciation account, the machine which was sold, whose depreciation is 15. So you write over here to machinery account, the machinery which was sold, the depreciation of that machine is 15. Yes, we will post this amount in the accumulated depreciation. So this side here it is 1,65,000. So remaining will indicate the depreciation during the year. 1,65,000 I am going to write the same amount in the credit side. So this difference indicate the depreciation charged during the year. So 65,000 is the depreciation charged during the year. So depreciation on, so we will write over here depreciation on plant and machinery during the year is 65,000. This is the plant and machinery depreciation. And loss on sale of machine is loss on sale of machinery. It's a non-operating losses. That is, loss on sale of machine is 3,000. Is it clear? So we have done the two working notes. One is for accumulated depreciation, another is for profit or oblique loss on sale of machinery. Two working notes we have prepared. Now, so first is this one is non-cash expense and this is the non-operating losses. Now see the another non-operating expenses is interest on debenture. Interest on debenture. It's a non-operating expenses because interest on debenture is a financial activities, comes under the financial activities. So it's a non-operating. So we'll calculate the interest on debenture. Definitely interest on debenture is already deducted while calculating the net profit before tax. So we will add back. We'll add this figure. So interest on debenture will be calculated. You see the debenture, information of debenture in the balance sheet under the non-current liability. That is the long-term borrowing 9% debenture. Last year it was 2,40,000 and this year it is 3,20,000. So it is increased by 80,000. And in additional information number B, it has mentioned that 9% debenture rupees 80,000 were issued on 1st April 2016. It means first day of the current financial year. So interest will be calculated on the entire amount of 3,20,000 at the rate of interest is 9%, at the rate of 9%. So we'll calculate the interest at the rate of 9%. So it is 28,800. So these three are coming under this heading, non-cash expenses and non-operating expenses and losses. So the total of this figure is 00869. 96,800. So we'll do the addition to the previous figure. So it is 008,612, 2,16,800. Now the next step is what? We deduct the non-operating incomes and gains. Non-operating incomes and gains are deducted by us. Non-operating incomes and gains are deducted by us. Non-operating incomes, and so there is no non-operating incomes and gains in this here. So it is 2,16,800. This figure indicates that the operating profit before change in working capital, operating profit before change in working capital, W.C means working capital, it is working capital. Now you add decrease in current assets, and increase in current liability. What we'll do? We will add decrease in current assets and increase in current liability. Now see the current assets, trade payables. Note number 2, refer to note number 2 for trade payables. So trade payable is the current liability. So trade payables, last year it was, creditor was 1,20,000, creditors 1,20,000, this year 1,40,000. So there is an increase in creditors is increased by rupees 20,000. It is increased by 20,000. Current liability, creditor is the current liability which is increased. And you know that we deduct the less. What we deduct is vice versa, increase in current assets and decrease in current liability are deducted by us. Decrease in current liability, this one we will deduct it. Okay. So the next you see in the trade payable, bills payable is there. Bills payable in last year it was 1,20,000 bills payable, and this year it is 40,000. It means bills payable is also reduced by 80,000. So when the bills payable will reduce, we will deduct it. Bills payable will be deducted because it is reduced. By how much amount? It is reduced by 80,000. This will be deducted. Now come to the other current liability. So refer note number 3. In other current liability, outstanding rent is there. Last year outstanding rent was 1,60,000 and this year outstanding rent is 1,80,000. So outstanding rent is also increased. So we will add it. Outstanding rent we will add it because outstanding rent is a current liability, and here it is increased by 20,000. It is also increased by 20,000. Okay. Now coming to the asset side, inventories. In current assets, inventory is given. Last year inventory was 1,60,000, this year inventory is 1,20,000. So there is a decrease in inventory. Inventory is decreased. Inventory is decreased. Okay. So last year inventories figure was, you see the figure of last year, inventory last year 1,60,000 and this year 1,20,000. It means it is reduced by 40,000. Next is your trade receivable. There is no change in trade receivable. Last year 1,60,000 and this year is also 1,60,000. There is no change in trade receivable. Okay, there is no change in trade receivable. So what we will do, we will add this one, 80,000 we will add. So this figure is now after adding 8, 6, 9, 2, 2,96,800. Is it clear? 2,96,800, and this will be deducted by us. 80,000 will be deducted by us. This will be deducted. Okay, so 0,086,12, 2,16,800. Okay, 2,16,800. So 2,16,800, this figure is called 2,16,800. It's a plus. So cash flow from, you write it over here, cash flow from operating activities. Cash flow from operating activities. This is number one. We have calculated this one, cash flow from operating activities. So this is one we have completed, one, cash flow from operating. Now you calculate the next, number two, cash flow from investing activities. Next is investing, cash flow from investing activities. Cash flow from investing activities. So we'll calculate the next. So coming to the investing activities, you know what is investing activities? Acquisition and disposal of non-current assets and non-current investment. And investment, non-current investment or current investment. Okay, so purchase and sale of fixed assets and purchase and sale of investment, dividend received and interest received. This comes under the investing activities. So coming to the, when we want to see the investing activity, we have to see the asset side. So come to the asset side, fixed assets is given under the fixed assets, tangible assets, working note number 4. Note number 4. So note number 4, there is a plant and machinery. So you prepare a ledger of plant and machinery ledger, you prepare ledger of plant and machinery account. Plant and machinery account, you prepare a ledger of plant and machinery. Okay. In the working note, you prepare the ledger of plant and machinery. Plant and machinery which is given in the note number 4, I am going to take the original figure. Original figure means cost is last year plant and machinery to balance brought down. First of all, we write the opening balance, that is 13 lakhs. 13 lakhs is the opening balance, and closing balance by balance carried down of the plant and machinery is 14,90,000. This is what? This is the original cost. I am going to prepare the plant and machinery at cost figure. At cost. Okay? At cost. So when I am going to take the at cost, the machine was, one machine was sold. So by bank account, one machine was sold by bank account at 32,000. 32,000, and accumulated depreciation on that machine is 15,000 is the accumulated depreciation, and there is a loss. So statement of PL, statement of profit and loss, which is 3,000 is the statement of PL. So you do the total, okay, you do the total. So total is what? 0, 0, 0, 0, 4, 5, 1, 15 lakhs 40,000, 15 lakhs 40,000. So you write the same figure over here, 15 lakh 40,000. Difference will indicate the purchase of plant and machinery. Difference figure will indicate what? Balancing figure will indicate the purchase of plant and machinery. So balancing figure is 2,40,000 is the balancing figure. This is the balancing figure which indicate the purchase of plant and machinery. So you write it over here, purchase of plant and machinery. This figure is indicating 2,40,000. This figure is indicating 2,40,000. Purchase of plant and machinery is an outflow of cash. Purchase of plant machinery indicate outflow of cash, and sale of machinery, one machine is sold, sale of machinery is the inflow of cash, sale of machinery. So sale of machinery is what? Machinery sold for rupees 32,000. This is the inflow. 32,000 is the inflow of cash. So it is without bracket, inflow of cash. There is one non-current investment in the asset side last, and it is given in the working note number 5. Note number 5. So current shares in XYZ Limited. So last year it was 1,60,000, this year it is 2,40,000. So purchase of investment, purchase of shares, purchase of shares, purchase of shares in XYZ Limited. So purchase of shares in XYZ Limited, last year it was 1,60,000, this year 2,40,000. So it is by 40,000, 80,000 is purchase. This is also outflow. When we purchase the shares of a company, of another company, it means it's a cash outflow. So showing in the bracket. So purchase of plant and machinery 2,40,000. Sale of machinery, this one we have taken 32, this is the inflow, and purchase of shares in XYZ Limited, which is given in note number 5 under the current non-current investment. Last year it was 1,60,000, this year it is 2,40,000. It is increased by 80,000. This indicate the purchase of shares. So final figure is 2 is outflow, 2 figure is outflow, 2,40,000 plus 80,000 is the outflow. So total outflow is 3,20,000 is the total outflow, and inflow is 32. So deduct the inflow from the outflow. So net figure is how much? It is 2,88,000. 2,88,000. It is 2,88,000. So 2,88,000 is cash flow from investing activities. This will indicate cash flow from investing activities. Cash flow from investing activities is 2,88,000. Is it clear? 2,88,000 is the cash flow from investing activities. Now the third activity is after cash flow from investing activity. First one is cash flow from operating, second one is cash flow from investing, third is cash flow from financing. Cash flow from financing activities. Cash flow from financing activities. Financing activities. Okay. This is the third activities. Operating first, second investing, and third is financing. So financing activity, you know that the change in the size and composition of owner's capital and borrowed capital, as well as interest paid, dividend paid, this will comes under the financing activities. For that you have to see the change in the size and composition of owner's capital and borrowed capital. We will see in the balance sheet which side? In the liability side. Liability side in the equity and liability. So when I see the equity and liability, there is no change in the share capital, equity share capital. Last year it was 10 lakhs and this year also it is 10 lakhs. So there is no change. Coming to the reserve and surplus, we have discussed it. Reserve and surplus difference is taken over here as a reserve and surplus. Note number 1, we have seen the note number 1. This is taken as calculating this one. Next is your non-current liability. You see the non-current liability 9% debenture. So 9% debenture is issued. Issue of debenture. Issue of 9% debenture. Issue of 9% debenture. Last year it was 2,40,000, this year it is 3,20,000, so it is increased by 80,000. So this is an issue of debenture, inflow of cash. And interest on debenture, interest on debenture, what we have already calculated, 3,20,000 current year figure into 9%. We have already calculated the interest on debenture over here. Here interest on debenture we have add back in the as a non-cash, as a non-operating expenses, that is 28,800. 28,800. Okay, this coming under the financing activities, and here it is cash outflow. Interest paid on debenture is cash outflow. So the only two is there. So net, you see the net difference is how much? Difference is, you write this difference over here directly, 51,200. Yes, 51,200. So this is what? Plus is excess, so cash flow from financing activities is how much? 51,200. 51,200. This format is in continuation. This format is in continuation of cash flow statement, is in continue. First, second, third is completed. Now the third one is going. So cash flow from financing. Now what we will do, we will add in fourth, we will see the net increase or decrease in cash and cash equivalent. For that we will add the three activities. This one, cash flow from operating, cash flow from investing. So cash flow from operating is, that is cash flow from operating, here it is in minus, cash used in operating, this is cash flow from cash used in investing activities, cash used in investing activities, cash used, here it is outflow is more, so cash used in investing activities. So there's two, inflow is 2,16,000 under operating activity inflow is 2,16,800 and in financing inflow is 51,200. Total inflow is 2,68,000 is the total inflow and outflow is 2,88,000 is the outflow. This is the outflow. 2,88,000 is the outflow. So cash flow from operating inflow is this one. This one. Cash flow from financing is this. Total inflow is this under two activities, and in investing it is cash used. So finally difference is how much? It is 20,000 used. So you'll write it over net decrease in cash and cash equivalent. Cash and cash equivalent. For that what we'll do? We do the total of the three activities. Activity number 1 plus activity number 2 plus activity number 3. In activity number 1 cash inflow, activity number 3 cash inflow, but activity number 2 in investing it is cash used. So that's why we have deducted. So difference is 20,000 minus, this figure indicate in minus. It means net decrease in cash and cash equivalent, and if it is plus then we will write net increase. Then you add fifth number, you add opening cash and cash equivalent, opening cash and cash equivalent at the beginning, cash and cash equivalent, you add it. So see in the question opening cash and cash equivalent, in the asset side, current assets, last information number C, cash and cash equivalent, last year it is 80,000. 80,000. So you add with the previous figure, it is minus 20 plus 80, so difference is 60 plus. So this will be the sixth number, closing cash and cash equivalent. This must be equal to closing cash and cash equivalent. This must be closing cash and cash equivalent. Now it is completed. Cash flow statement is completed. Okay. So the working note number 1, 2, 3. They are the three working notes. This is your supporting. I have calculated it. Supporting. So last one is cash and cash equivalent at the end is rupees 60,000. It is in plus. Okay. Here it is. In cash flow from operating activity, you see in cash flow from operating activities, this is the inflow. Cash flow from operating in finance investing activities, it is cash used, because minus is greater than your plus figure. So it is cash used. This is within the bracket, cash used. And third one is cash flow from financing 51,200. It is the cash flow. It is inflow. So in two activities there is a inflow and one activity there is a outflow. So add this one, 2,16,800 plus 51,200 and minus 2,88,000, you will get this figure 20,000 net decrease in cash and cash equivalent. Minus is more than plus. Now come to the next question of cash flow statement. A comprehensive question. We will find out the cash flow from operating, cash flow from investing and cash flow from financing. So the question is, From the following balance sheet of X Limited, you are required to prepare cash flow statement. So it's a balance sheet of X Limited, balance sheet of X Limited. So we'll prepare the cash flow statement of X Limited. Okay, of X Limited. 2 years figure is given, 31st March 2017 and 31st March 2018, 2 consecutive years. So we are going to prepare the cash flow statement for the year ended 31st March 2018. So the balance sheet, equity and liability side, the information are share capital, reserve and surplus. In current liabilities, short term borrowings. Note number 1 is given, so you refer the note number 1. In short term borrowings, it is given bank overdraft. Now coming to the balance sheet, trade payables is there, short term provision is there. Short term provision is in note number 2. So immediately you refer the note number 2. So under the note number 2, in short term provision, there is a provision for taxation provisions. Now coming to the assets in the balance sheet, non-current and current assets. First, non-current assets, under non-current assets, fixed assets, tangible. So note number 3. Now I am going to refer the note number 3, tangible assets, land and plant is given. Now coming back to the balance sheet, current assets, inventory, trade receivable, cash and cash equivalent and other current assets. So these are the informations. Apart from that, additional information is given regarding the interim dividend paid during the year, rupees 60,000. Land was sold at a profit of 30,000. Plant of the book value of 20,000 was sold during the year at a loss of rupees 8,000. The 3 additional information is given. Now I start with the cash flow from operating activity. First will be the cash flow from operating activities. Yes, cash flow from operating activities. For that we have to find out the net profit before tax and extraordinary item, extraordinary items. Okay, extraordinary items. So this will be calculated in the working note. Extraordinary item, net profit before tax and extraordinary item we will calculate in the working note. Net profit before tax and extraordinary item I am going to calculate in the working note. This is the first working note. This is the first number 1 working note. So we'll calculate the net profit before tax and extraordinary items. So net profit after tax and after tax is given. Net profit after tax is will be the difference of the last year profit. The profit is not directly given in the question. Then you see the difference of reserve and surplus. So reserve and surplus, last year it was 91,000 and this year it is 1,70,000. So see the difference of 1,70,000 minus 91. So 1,70,000 minus 91, the difference is how much? Difference is 79,000 is the difference amount. So this difference indicates the net profit after tax. Now there is one interim dividend given in the question. Interim dividend, what is interim dividend? If the company earn the profit more than the expectation level, you can say the super profit, then company may declare the interim dividend to their shareholders. Okay, so interim dividend is declared by the company apart from the annual dividend. This dividend only be declared when the company earned a very good profit which is more than the expectation level. When company is satisfied with the profit, okay, so company may declare the interim dividend in between the financial year. So interim dividend is the allocation of profit. This will be added back. So interim dividend declared by the company as per the additional information number 1 is 60,000. So we will add. Then we will add the provision for tax. Provision for tax made during the year for the current year. Made during the year. It means for the current year. Provision for tax information is given in the note number 2. Provision for tax current year is 34,000. So you add the provision for tax of the current year. So this is after adding is, this one is 1,73,000. 1,73,000. So you write it net profit before tax and extraordinary item 1,73,000. You write this figure over here directly. Net profit before tax and extraordinary item. Is it clear? Now you add non-cash expenses, and non-operating expenses and losses. Non-operating expenses and losses, we will add it. So non-cash expenses is our depreciation. For that we have to see non-cash expenses is what? Our depreciation. So see the tangible assets, note number 3, land. Land last year it was 2 lakhs, this year it is 1,50,000. You prepare the ledger of land. On the basis of the information given in the working note, you prepare the ledger of land on the basis of the information given in the question. So opening balance of land given over here is opening balance of land is in working note number 3. In note number 3, last year it was 2 lakhs and this year balance will write this side by balance carried down 1,50,000 is the current year balance. And information number 2, if you see the information number 2 in the additional information number 2, land was sold at a profit of 30,000. When the land was sold at a profit of 30,000, then we will write it over here, statement of PL. Statement of PL, it is 30,000. It's a profit of this. It means land is sold at which value? Through the difference figure, we will find out the sale of land. We will find out the sale of land through the balancing figure by bank account. By bank account. This is the balancing figure. Here we will detect the sale of land. So land is sold for rupees 80,000. This is the balancing figure. Okay, this is the balancing figure. Similarly, you prepare the for depreciation reason plant and machinery. Directly no figure is given regarding the depreciation of plant and machinery. So you prepare the ledger of plant. You prepare the ledger of plant. Okay, I am going to prepare the ledger of plant in the working note plant account. Plant account. In the working note, I am going to prepare the plant account. Okay. Now see over here in the plant account, opening balance of plant given in the question is how much? Opening balance. See in the question, opening balance. See the note number 3. Opening balance is 3 lakhs. Opening balance of plant is 3 lakhs. And closing balance of plant is how much? It is 2,25,000. 2,25,000. Now see in the additional information, plant of the book value 20,000 was sold at a loss of 8,000. So it means plant is sold by bank account, it is sold at rupees 12,000. It is sold at rupees 12,000 and there is a loss. So this loss will be transferred to statement of PL, statement of profit and loss. That is 8,000 is the loss, statement of profit and loss 8,000. Okay. So difference will indicate the depreciation. The difference figure will indicate the depreciation. This figure will indicate the depreciation charged on plant during the year. This is the balancing figure. This will be the balancing figure. So difference you find it out. This side total is 3 lakh. Debit side total is more. Credit side total is less. So difference will indicate the depreciation charged on plant during the year. Okay, so this side is 2,25,000 plus 22,45,000. So it is 55,000 is the depreciation on plant. This is the depreciation on plant is 55. This is calculated through the balancing figure. So opening balance of plant is 3 lakhs, closing balance is 2,25,000. Plant is sold at a loss. So loss we have written this side. The cost, information number 3, book value of the plant is 20,000. It is sold at a loss. So it is sold at a loss of 8,000. It means plant is sold for rupees 12,000. It is sold for rupees 12,000. So 12,000 by bank account, by statement of PL 8,000. This is loss. And the difference amount indicate the depreciation charged on plant during the year, that is 55,000. Charged on plant during the year, that is 55,000. Is it clear? Charged on plant during the year. So we will write it over here, depreciation on plant. Depreciation on plant. How much it is? Depreciation on plant is 55,000. Loss on sale of plant is non-operating loss. Loss on sale of plant is our non-operating loss, and loss is 8,000 is the loss. Loss on sale of plant is our non-operating loss. So you added these two, it is 63,000 you add from the previous figure. So it is 6, 4, 2,46,000, 2,36,000. Now you deduct non-operating incomes and gains. Non-operating incomes and gains you deduct it. Incomes and gains. We are going to deduct non-operating incomes and gains. Land is sold at a profit of 30,000. So profit on sale of land is a non-operating income, non-operating gain, non-operating gain. So profit on sale of land, it's a non-operating gain, that is 30,000. You deduct it from it, you deduct it because it is less. This one is add. So the figure is 0,00602, 2,06,000. This will indicate operating profit before change in working capital. Operating profit before change in working capital. Before change in working capital. Okay, before change in working capital. Operating profit before change in working capital. Now coming to the next step. Next step is we will add decrease in current liability and increase in current, decrease in current assets and increase in current liability. This we will add, and vice versa we will deduct it less increase in current assets, increase in current assets, and decrease in current liability we will deduct. Just opposite. In decrease in current assets we will add and increase in current liability, and just opposite, increase in current assets and decrease in current liability will be deducted by us. Now see in this question regarding the current assets. First, current assets is inventory. Inventory last year it was 2,50,000, this year it is 4 lakh. So inventory has increased. Inventory has increased. Last year it was 2,50,000, this year it is 4 lakh. So it is increased by 1,50,000. 1,50,000. Okay, it is increased by 1,50,000. Coming to the next, trade receivable. Last year it was 1,55,000 and this year it is 3,82,000. So trade receivable is also increased. Trade receivable is also increased. Trade receivable, it's a current assets. Trade receivable means both bills receivable and sundry debtors, jointly known as trade receivable. So trade receivable is increased by how much amount? 3,82,000 in the current year. Last year it was 1,55,000. So it is increased by 2,27,000. It is increased by 2,27,000. 2,27,000. Okay. Now coming to the other current assets. Last year it was 20 and this year it is 25. So current assets, other current assets is also increased. Other current assets. Other current assets is also increased by 5,000. Last year it was 20, this year it is 25. So it is increased by 5,000. Now coming to the current liability, number 1, short-term borrowings in note number 1 given. Short-term borrowings, it is a bank overdraft. Okay, it's a bank overdraft. This will not come. Bank overdraft will be in the financing activity. We will reflect in the financing activities, bank overdraft and cash credit. Next is trade payables. Trade payable last year 70, this year 1 lakh. So trade payables is increased. So increase in current liability. Trade payables. Trade payables is increased by, trade payable is increased by last year 70,000, this year 1 lakh. So it is increased by 30,000. Short-term provision, there is a provision for tax. So provision for tax, we have done the treatment at the top here, and then at the bottom of the operating activities we will deduct the provision for tax paid during the year will be deducted by us. So these things has come. Those 30,000 we will add. So after adding the 30,000, it is 0,00632, 2,36,000, and thereafter we will deduct this figure. So 0,00283, 3,82,000 will be deducted by us. 3,82,000 we will deduct from the previous figure. So the figure is 0,004. Which side is more? Minus is more. Here the minus is more, outflow is more. 3,82,000 minus 2,36,000 is the plus. So net change is 1,46,000. 1,46,000. You write the 1,46,000. It is still outflow. Less payment of tax, less payment of tax, payment of tax. Now we'll do the payment of tax. Payment of tax. So tax we will pay, last year tax we will pay this year. So last year tax is 26,000 is the tax last year. Payment of tax. We'll do the payment of tax. So after that the figure is, both is minus. So it is 1,72,000. 1,72,000. This is the net outflow. 1,72,000 net cash. Net cash used in net cash used in operating activities. Operating activities. Net cash used in operating activities. Is it clear? Net cash used in operating activities. Net cash, here you will write net cash used in operating activities. Operating activities. Okay, operating activities. So this is the final figure comes, net cash used in operating activities 1,72,000. Okay, this figure you write it in the outer column, 1,72,000 net cash used in operating activities. Now we'll calculate the cash flow from investing activities. We'll calculate the cash flow from investing activities. Now come to the next. After operating activities, second activity is cash flow from investing activities. Investing activities. This is the second activities in sequence. So cash flow from investing activities. Investing activities, you know that the acquisition and disposal of assets. As acquisition means purchase, disposal means sale of fixed assets and investment, and interest received and dividend received. So coming to the, if you see the purchase and sale of investment, so you see the asset side, your asset side non-current assets, intangible assets, note number 3. So note number 3, land and plant is given. So here you see sale of plant, sale of land is given. Sale of land we have already calculated in the working note. Sale of land is 80,000 is the sale of land. This is inflow. Okay, and you see here sale of plant. Sale of plant. Sale of plant is how much? Sale of plant is 12,000. Sale of plant is 12,000. Okay, so these only two coming under the investing activities. So it is 92,000 total. 92,000. So write it this figure. It's this two are inflow. Sale of land and sale of plant is the inflow. So cash flow from operating activities, cash flow from investing activities is how much? It is 92,000. You write the figure in the outer column. Okay, 92,000. Now come to the third. Cash flow from financing activities. Financing activities. This is the third activities, cash flow from financing activities. Financing activities means change in the size and composition of owner's capital and borrowed capital, and dividend paid, interest paid. These are the things comes under the financing activities. When it is related to the change in the size and composition of owner's capital and borrowed capital, it means we have to see which side of the balance sheet first. We will see the equity and liability side. So we'll see the equity and liability side. Share capital is the first one. There is an increase in share capital. Last year figure is 6,75,000. This year figure is 8 lakh. It means issue of share capital, issue of share, okay, capital. Issue of share capital is how much? It is 1,25,000. 1,25,000. You see the difference. Last year it is 6,75,000 and this year it is 8 lakh. So it means it is increased by 1,25,000. So it's an inflow of cash. It's an inflow of cash. Now next is, you see bank overdraft. In short term provision there is a short term borrowings. You see the bank overdraft. So bank overdraft coming under the financing activities. Last year it is 66,000. This year it is 88,000. So bank overdraft, money received from the bank overdraft, proceeds. It's a proceed, extra overdraft we have taken. So how much it is? It is overdraft. We have taken the excess money. See the difference. 88,000 minus 66,000. So difference is 22,000. It is increased by 22. Okay. So bank overdraft is 22. Payment of interim dividend. Payment of interim dividend. This comes under the financing activities. Dividend. Interim dividend is paid. 60,000 interim dividend is paid. It's a outflow. It's a outflow. Payment of interim dividend. It's a outflow. So final figure is how much? There are the three figures only. Issue of share capital, proceeds from the bank overdraft. This is what? Proceeds from bank overdraft. So the figure is, these two are in plus. So it is 1,47,000 minus 60. So it is 87,000. 87,000 inflow. So cash flow from investing activities is 87,000. Now we will do the total of the three activities. We will do the total of the three activities. So cash flow from operating activity is 1,72,000 minus cash flow from operating 1,72,000. It is minus cash flow from financing investing is 92 plus. It is 87 plus. So 2 are in plus inflow. So total is 1,79,000 minus 1,72,000. So it is 7,000. It's a difference indicating 7,000. It's a plus figure. So fourth number will be net increase in cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent is how much? Cash and cash equivalent is 1 plus 2 plus 3. 1 is cash flow from operating, this is investing, and this is financing. Third one is. So when we do the total, this is the operating minus 72, 1,72,000, and in these two, in investing and financing, it is plus. So total plus is this much and minus this one. So 7,000 is the net difference. It is plus, net increase. Now you add fifth number, you add opening cash and cash equivalent, opening cash and cash equivalents. So opening cash and cash equivalent is given in the question under the current assets 3000. Last year figure is 3000. So when we add this one, the total is 10,000. This must be matched with the cash and cash equivalent at the closing. Cash and cash equivalent must be matched with the closing cash and cash equivalent. Cash and cash equivalent. This must be matched. 10,000. Okay. So it is completed. It is completed. This is the working note. This one is working note. Is it clear?